Ladies and gentlemen, welcome to our weekly investor forum. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another investment update. Joining me today is Shanice Williams, investment advisor, and my co-host for today. Welcome, Shanice.
Thanks, Rachel.
Today we'll be diving into Main Event Entertainment Group and Image Plus Consultants, and we're excited to share these insights with you. If you like the content, don't forget to hit like and share this video. If this is your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. So, let's get started. I'll kick off things with Image Plus Consultant, then I'll hand over to Shanice and she'll discuss main events. So, Image Plus Consultants Limited, operating under the brand name Apex Radiology, is a medical imaging company based in Jamaica. It provides a range of diagnostic imaging services, including X-rays, MRIs, CT scans, ultrasounds, you name it. The company went public back in January 2023, raising nearly $500 million from the junior market at $2 per share. Currently, the stock is trading at $1.90, which is 5% below its IPO price, with a PE ratio of 11 times compared to the junior market average PE of 17 times. The stock reached a 52-week high of $2.25 and peaked at $2.47 back in July of last year, and we can actually see that on the last slide. So let's examine the stock and see why it's trading below its IPO price and the market average PE. For the year ended February 2024, the company reported a 9% increase in revenues to $1.2 billion from $1.09 billion in the previous year. However, their cost of sales increased at a faster rate of 14%, which slightly affected their gross profits, resulting in only a 7% improvement in gross profits compared to the previous period. Total expenses rose by 18% due to higher staffing costs, which reduced operating profits by 13% to $222 million from $255 million the prior period. Finance costs also increased by more than 100%, driven by the purchase of a few imaging machines. After factoring the above-mentioned expenses, the profit before tax for the full year amounted to $224 million, an 11% decrease relative to the $251 million reported in 2023. After taxes, the company booked net profits of $211 million, a 10% decline on the prior year. Examining the balance sheet, we're seeing here that assets grew by 39% to $1.6 billion, driven by the acquisition of 33 Lady Musgrave Road for about $3 million, along with a few new imaging machines that I mentioned earlier. Liabilities, however, increased by 142%, but this was driven primarily due to the financing of these new machinery that they purchased. And finally, shareholders' equity rose by 15% to $1 billion, up from $938 million. So overall, the company has consistently grown its revenue and remains a significant player in the Jamaica's medical imaging market. Over the past 3 years, revenues have increased by 25%, now averaging over $1 billion in annual sales. They have also expanded from a single location to 4 locations across Jamaica, with 3 in Kingston and 1 in St. Anne. However, profit fluctuations are noticeable, as we're seeing in the next slide, and it may be of concern to shareholders and probably why the stock is trading 5% below its IPO price. We recognize that profits in this industry are highly sensitive to costs associated with maintaining, repairing, or even replacing these specialized imaging equipment, as well as the potential downtime that arises from this. This year alone, the company's financing costs doubled due to purchasing some new expensive imaging machinery. But this shouldn't be viewed negatively. These investments in new equipment can lead to future expansion and enhance service offerings, which may ultimately improve long-term profitability. The company has also disclosed that they are exploring acquisition opportunities as they have recognized there is a sustained and increasing demand for imaging services. So, yes, the stock is trading below its IPO price, but let's watch this company closely over the next 3 quarters to observe if it will grow into its valuation as we anticipate the market to improve over the next few quarters. What are your thoughts, Janice?
Oh, Rachel, I agree with you. I do believe that IPCL was actually a victim of its IPO price because it listed on the junior market when people are used to in an environment on the junior market where stocks list at about $1. So an IPO listing $2, I think it was $2, a
Yeah,
little above.
$2.
I don't think the market really knew what exactly to do with it, and so it could not maintain that $2 price. I don't think it's a bad company, as they're diversifying their revenue stream as well. We should be seeing better results, better dividends from them, and we should definitely see them approaching back their stock price and going above it, because trading at an 11 times PE when the market is 7 times, it's well below the market average, so it has a lot of room to grow. But we just have to wait and see over the next couple of quarters.
Yeah, I agree. Thanks for that. So I'll just hand over to you and you can get started with main events.
All right, so we're looking at Main Event Entertainment Group, a company we're not unfamiliar with. It's a marketing and events promotion and execution company. They supply equipment to large and small events. So let's look at the numbers. For the 6 months that ended in April, the company saw a 15% decline in their revenue from 1.15 billion in 2023 to 986 million in 2024. They attributed this decline to the lower performance of their traditional revenue sources, which is caused by the changing landscape within the entertainment sector. So they saw a decline in the market spending of some of their major clients. The cost of sales also reduced. You can see that most of the line items on the income statement would have gone down. Gross profit would have decreased 16%, net profit decreased 37%. Their finance costs actually increased by 33%, and this was due to the increase in the interest expense on their right-to-use assets. So looking at the balance sheet, we can see where they had a decrease in both their assets and their liabilities, a 3% decrease in the assets and a 26% decrease in the liabilities. And this also reflected on their equity, showing an increase of 8%. They also decreased their receivables during this period. So we can see that they're making an effort to improve their cash flow. Looking at the key statistics for the stocks, as at July 9th, the stock price closed at $12.19. It was trading at a PE of 27.03 times, a book value per share of 3.11. There's a trailing EPS of $45.10. It has a 52-week high of $18, so we can see it's well below its 52-week high and closer to its 52-week low, which is $11.02. So looking at the quarterly profit movements, we can see the fluctuation in their prices over the time. Notably, the company had invested in critical maintenance exercises to ensure the upkeep of its audio, visual, and lighting equipment. And this highlights their commitment to quality and excellence. So the outlook for Main Events, though they're in a lower revenue period coming off COVID, they actually indicated that during the COVID period, right after the COVID period, there was an increase in the marketing spending and heightened with the events that we were seeing, which actually decreased coming into 2024. So the carnival numbers were not the same as 2023. Carnival 2024 actually was not as big as Carnival 2023. And this reflected on a lot of the promoters, which included main events. So they have decided that they are going to be targeting more larger events and focus on supplying their equipment for these large events instead of the smaller ones. So the company has invested in the maintenance to ensure the upkeep of its audio, visual, and lighting equipment. They just did the food awards, which happened in June. So for their next quarter, the numbers should be looking more in line with what we're used to. So we'll see the food awards numbers. They have Sumfest coming up. They have a lot of big summer events coming up as well. So those should positively reflect on the company. The shareholders of the company will also be voting on a share capital increase at their next AGM, which was supposed to be July 4th, but would have been postponed due to Hurricane Beryl. So they're going to be voting to increase the share capital of the company. So that they can raise more equity on the market, and this could drive events such as a stock split, a rights issue, or an APO for main event, which will be an exciting period for that company. So we look forward to see how exactly they're going to handle that increase in their share capital. Rachel, any thoughts?
Thanks for that, Shanice. I think Main Event has a more robust market presence and a reputable brand in the entertainment industry. But, it's important to recognize that the market for main events is highly competitive and the company is feeling some of those effects now. But despite this, Main Events is uniquely positioned as one of the few companies, that are capable of handling the significant upfront capital required for executing large-scale events. As you mentioned, they just invested some capex into upkeeping their audio, visual, and lighting equipment so they can ensure that they're delivering quality and excellence, so they can, which is in line with going after the large scale events that they want to target for this year. So but outside of that, the company, should probably explore expansion strategies and further diversify its product and service offerings to enter new markets and drive revenue growth. But overall, I think it's a great company. I love them, solid brand, and I still remain confident in Solomon and his team. And that's it for today's discussion. I'd like to thank our viewers for tuning in. Your support is always appreciated. I'd also like to thank my co-host Shanice for contributing to today's discussions. If you're curious about our updates on our virtual investor forum and updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady wins the race. Thank you.